Welcome back to the Deep Dive. This is where we take the big stories shaping Ethiopia's economy, especially those covered in Addis Fortune, and really dig into what they mean for you.
That's right.
This week, we've got three, well, seemingly separate threads. Our job today, weave them together, show you the underlying forces at play.
Absolutely.
So picture this. Regulators are pulling in, well, almost opposite directions. You've got this small, niche banking sector getting a lifeline, a policy break they desperately needed. Then boom, a huge, power-hungry digital industry gets hit with a major cost shock.
A big one.
And finally, we look inside two major commercial banks, Burhan and NIB, and see totally different stories unfolding. One's about strategic pivots, the other, well, it's a full-blown crisis.
Yeah, and taken together, I mean, what you're really seeing is this incredibly delicate balancing act regulators are trying to pull off.
A show.
Well, they're asking, how do we help these new sectors, foster inclusion and growth without wrecking the whole system? And crucially, how do we make sure things are stable, that essential resources like power actually recover their costs? It's policy hitting the real world hard.
Okay, let's break down the three areas then. First, that credit cap lift for the Sharia-compliant banks. Big deal for them.
Definitely.
Second, the energy sector. This new tariff structure for crypto and data mining, that's causing waves.
Serious waves.
And third, Burhan Bank pausing that massive construction project versus NIB Bank dealing with, wow, billions in losses and this incredible internal legal fight.
Quite the contrast.
All right, let's dive in, starting with those banks, the ones operating without interest. What exactly happened?
Okay, so the National Bank of Ethiopia, the NBE, they've lifted the credit growth ceiling. This was specifically for the 4 fully Sharia-compliant banks.
Zamzam, Hajira, Shabelle, and Remis.
Exactly. And they've been under this restriction for more than 2 years. It was pretty tight, peaked at 18% growth allowed.
Now, this cap was meant to curb inflation across the board, right? But our recording in Addis Fortune called it a double blow for these specific banks. Why them in particular?
It boils down to how they have to operate legally. Because they can't charge or receive interest, they're basically locked out of all the standard tools other banks use to manage their cash flow.
Like what kind of tools?
Well, think government bonds, treasury bills, even borrowing quickly from other banks in the interbank market. They can't touch any of that stuff.
Because it all involves interest payments.
Precisely. So if they suddenly need cash, if there's a liquidity shock, they don't have those easy, quick ways to get funds that conventional banks rely on.
So they lack those profitable, low-risk places to park cash or ways to cushion themselves?
Exactly. And their main way of doing business, this profit-sharing model where they might buy goods for clients, it just doesn't inject cash as quickly as conventional lending does. So the credit cap basically strangled their main path for growth and profit. It really put them in a corner.
Okay, but these 4 banks, they're really small, right? Less than 1% of total national credit.
Tiny, relatively speaking. Their deposits were under 250 billion birr by mid-2024. That's less than 10% of the total.
So was the NBE even right to include them in the cap in the first place? Did it make a difference to inflation?
That's the million-dollar question, isn't it? The NBE needed a broad tool for inflation, but now, by lifting it just for them, they're kind of admitting the impact on overall inflation will be tiny.
So it's more about keeping them afloat.
Yeah, the vice governor, Fikadu Degafe, basically called it a temporary waiver. It's a signal, really, a way to support this segment, which is important for financial inclusion, bringing more people into the banking system.
While they work on the long-term fix.
Exactly. The real solution is developing proper Sharia-compliant instruments, bonds, money market tools that these banks can actually use. This waiver buys them time.
So the banks are happy.
Yeah.
A window to lend more, expand branches.
They welcome it, for sure. But the executives are very clear. This isn't a substitute for those proper financial tools they need. It's a stopgap.
And analysts are a bit skeptical too, aren't they?
Some are, yeah. They point out that the real bottleneck for these banks might actually be getting deposits in the first place. Mobilizing funds.
Meaning, even without the cap, they might not have grown much faster anyway.
It's possible. Some reporting suggests they hadn't even hit the previous ceiling sometimes. So lifting it helps. But the fundamental issue, the lack of Sharia-compliant bonds and tools, that remains the core challenge. The pressure's still on the NBE to deliver those.
Makes sense. It's a temporary patch, not a structural fix. Okay, let's pivot now. From a sector getting some breathing room to one getting, well, a bit of a shock. The crypto mining industry.
Right. Big shift here.
What drew these global operators to Ethiopia initially? It was the power, wasn't it? Specifically, cheap hydropower.
Super cheap. It was a flat rate, around 3.14 US cents per kilowatt hour. Very attractive globally.
That advantage seems to be disappearing quickly.
And it is. The Ethiopian Electric Power, the EEP, they've announced this massive overhaul of the tariffs. It kicks in December 1st, 2025.
And the big change is this move to a time of use system.
TOU.
Exactly, TOU.
Break that down for us. What does time of use actually mean for a miner?
It means the price you pay for electricity changes depending on when you use it. They're splitting the day into different periods. Peak hours, when demand is highest across the country.
Like evenings when everyone's cooking and turning on lights.
Yeah, typically 6 p.m. to 11 p.m. Then you have shoulder hours, sort of intermediate demand times, and off-peak hours, usually late night and daytime, when overall demand is lower.
And the goal is to push the miners, who run constantly, to use less power during those peak times.
Precisely. Incentivize them to shift load, ease the strain on the national grid when it's most stressed. But the rates themselves are going up significantly too.
How steep are we talking?
Very steep. The average rate starts at 4 cents per kilowatt-hours in late 2025, but by Phase 3, July 2027, it's projected to hit 6.5 cents.
Wow, that's nearly double the old rate. Almost double the old flat rate, yeah. And during those peak hours, it'll spike to 7.2 cents per kilowatt-hours.
Ouch. Okay, but there's also this other new thing, the availability-based tariff, ABT. What's that about?
ABT is supposed to introduce some fairness, given Ethiopia's power supply can sometimes be, well, inconsistent.
Right.
So if the EEP can't actually deliver the amount of power they promised, say, supply drops to only 60 or 70% of the contracted amount, then the tariff, the price the miner pays, goes down proportionally.
Yeah, so it shares the risk of power outages or fluctuations.
Kind of. It tries to link the price paid more closely to the service actually received. But honestly, the industry is much more focused on that massive base rate increase.
Yeah, the reaction sounds intense. We saw reports, operators estimate their annual power costs jumping 25, maybe 30%.
Which is huge in their business.
They're saying it threatens Ethiopia's whole position as a competitive place to mine crypto. We quoted one industry lawyer basically saying this hike goes way beyond what they expected based on their initial agreements.
And you have to understand why power cost is so critical for them. For Bitcoin mining, electricity isn't just a cost, it's the cost. It's usually around 60% of their total operating expenses.
60%, okay, yeah.
So even a small increase, let alone a near doubling, can just wipe out their profit margin completely. It forces them to think about packing up and moving, even if Ethiopia has other advantages like the cool climate or that young workforce.
But the EEP has its reasons, right? It's not just trying to squeeze the miners.
No, definitely not. From the EEP's perspective, and looking at it neutrally, they argue this is essential for their own financial health. They need cost recovery. The old rates were probably unsustainably low.
And the TOU system specifically, that's about managing the grid.
Yes. It's a direct attempt to protect the national power grid, especially during those peak evening hours, 6 p.m. to 11 p.m., when residential demand surges.
And the scale of the crypto industry's demand is significant.
It's massive. Our sources indicated the industry was consuming roughly a third of the entire national power output.
A third.
Yeah. It's an astonishing figure, and that's why the government actually froze issuing any new licenses to miners back in March 2025. The infrastructure just couldn't keep up.
So without this price hike and the TOU system, there was a real risk of destabilizing the power supply for everyone else.
That seems to be the EEP's and the government's calculation. It's that classic development dilemma, isn't it?
Yeah.
You have a great resource, cheap hydropower, you attract investment, it grows super fast.
And then you realize your infrastructure can't handle the success without either huge upgrades or, well, making it less cheap.
Exactly. They're caught between wanting the foreign currency the miners bring in and needing to keep the lights on reliably for homes and other industries.
Fascinating tension. Okay, so we've seen external forces, regulation, resource limits shaping these sectors. Now let's turn inward to internal strategies and crises at two big banks, Burhan and NIB. Starting with Burhan.
Right. Burhan Bank made a really interesting, pragmatic move. They had this plan for a massive headquarters, 50 stories, 12 billion birr project. Huge.
This real statement building.
Totally. But it was going to take like 10 years to finish. They put it on hold.
And instead,
they opted for something much more modest. A 16-story building costing about 1.2 billion birr that they reckon they can finish in just 2 years. They're calling it a transitional headquarters.
What was the reasoning? Why the pivot?
The executives were pretty upfront, according to our reports. They said the priority right now isn't a flashy HQ, it's shoring up their capital base, which is currently around 8.5 billion birr, and just getting more efficient operationally.
Efficient how?
Well, right now, their staff are scattered across 4 different rented buildings. They're spending nearly 74 million birr a year just on rent. Consolidating makes obvious sense.
Less about image, more about the bottom line and operational sanity.
Exactly. It seems like a really sensible, financially prudent decision. You know, financial experts often criticize the skyscraper race among Ethiopian banks building these enormous, expensive HQs that are non-core assets, provide low returns, and tie up capital that could be used for lending.
It's all about prestige, maybe.
Often seems like it. So Burhan's board basically said, look, big construction has to be based on what we can actually afford right now, not just appearances. Though it's worth noting, not all shareholders were happy. There were complaints about delays and transparency.
Interesting. Okay, now contrast Burhan's prudence with the absolute chaos unfolding at Nib Bank. The numbers are just staggering.
They really are. A 2.9 billion birr net loss reported, and the main driver, a massive 4.4 billion birr loss specifically from foreign exchange transactions in just one fiscal year, 2024-25.
Which left them with a huge liquidity gap.
Yeah, a hole of about 5.85 billion birr. It's a catastrophic failure of management and oversight.
And fallout is serious. A lawsuit?
A big one. The bank itself filed a civil suit trying to recover 507 million birr in damages, and they're targeting 30 former directors and executives.
Accusing them of what?
The suit alleges gross mismanagement and, crucially, abuse of foreign exchange mechanisms. This is one of the most severe governance meltdowns we've seen in the private banking sector for a long time.
Okay, but here's where the story gets really wild, right? The shareholder meeting, the General Assembly vote. Tell us about that.
It's incredible drama. So the shareholders held this vote, a very contentious one, on whether to actually exempt 3 specific former directors from that lawsuit the bank was filing.
Exempt them. Why would they do that?
Because these 3 individuals, their names were Malaku, Amar, and Kifel, had apparently been raising red flags for years. They had consistently recorded dissenting opinions in the official board minutes.
So they were the internal critics, warning about what was happening.
That seems to be the case. They were reportedly warning about integrity issues, dodgy procurement processes, conflicts of interest, the very things that led to the disaster.
And the shareholders voted to protect them from the lawsuit targeting the management.
Yes. The motion to exempt them passed pretty decisively, actually, with 66.4% support. This was despite a lot of visible anger in the meeting, people calling for criminal charges against everyone involved.
Wow. So the shareholders basically said, these 3 tried to warn us. They shouldn't be punished along with the rest.
That's one interpretation. It certainly reveals just how deep the divisions within the bank went, and for how long these problems were festering. It kind of validates the dissenters' warnings after the fact.
What about the regulator, the NBE, and all this? Were they asleep at the wheel?
Well, that's a critical question people are asking. The NBE did impose penalties on NIB, totaling about 348.4 million birr.
For what, exactly?
For breaching liquidity requirements and, significantly, for delays in processing payments through the RTGS system.
RTGS, that's the real-time gross settlement system for big interbank payments.
Exactly. It's the plumbing of the financial system for large transactions. Delays there are a serious sign of instability.
So the MBE knew there were problems.
They knew. They attended the annual meetings, they reviewed the reports, but the penalties came after the bank had already racked up these massive losses. The criticism is that they didn't intervene forcefully earlier, before billions were lost.
It raises questions about whether the NBE is willing, or maybe able, to use its oversight powers proactively enough to prevent these kinds of failures, right?
Precisely. It's one thing to have the power, another to deploy it effectively and preemptively.
Okay, so let's try and pull these threads together for the listener. We've seen Sharia banks getting a temporary boost.
Wow, they wait for essential regulatory tools.
We've seen the crypto miners facing a major cost hike as the government tries to manage energy resources.
Highlighting that tension between attracting investment and national infrastructure limits.
And then we see Burhan making a prudent strategic choice, while NIB faces an absolute meltdown due to governance failures.
Right. It really shows Ethiopia is juggling multiple challenges at once, supporting new, potentially vulnerable sectors like Sharia banking, trying to get a handle on resource-intensive industries like crypto mining, and all this while established players are undergoing these fundamental tests of strategy and, crucially, governance.
The underlying theme seems to be this race against time, doesn't it?
I think so. A race between regulatory development, like getting those Sharia instruments ready, and the sheer force of market pressures, like the backlash to the crypto tariffs.
And underpinning everything.
It always comes back to the basics. Can the financial sector raise enough capital? And can it ensure good, clean governance? Because without those, weathering these kinds of policy shifts and market shocks becomes incredibly difficult.
What's the one thing that really jumps out at you from all this? For me, it's got to be that shareholder vote at Nib Bank.
Yeah.
It's just such a vivid reminder that corporate governance isn't just some abstract concept on paper. It's about power, politics, personalities inside these institutions, and ultimately, accountability. Thousands of ordinary shareholders' money is on the line.
That's absolutely true. The human drama there is compelling. But I keep thinking back to Burhan Bank's pivot away from the giant headquarters. You know, we hear experts constantly point out how risky and low return these massive real estate projects are for banks. It makes you wonder, what's the real cost, not just in Burr, but strategically, when a bank chooses to pour resources into image and fixed assets, that concrete and glass, instead of maximizing its core job, lending money and strengthening its capital base?
That's a great question. Prioritizing substance over symbols.
Exactly. What's the long-term opportunity cost of choosing the skyscraper over strengthening the actual bank? That's something definitely worth thinking more about.
A perfect thought to end on. That's all for this deep dive.